Fiat versus DeFi. 2022 marks global rise of CBDC. The era of physical cash is going to an end, and that of digital currencies has begun. A central bank digital currency is a type of central bank money that is broadly available for the general public. In the United States, two types of central bank money are present: the physical currency that is issued by the Federal Reserve and the digital balance that is controlled by a central bank. CBDC differs from other digital currencies, like cryptocurrencies or payment apps, in a way that it is centralized by a Federal Reserve, not by any commercial bank. What is fiat? Fiat money is money that the government guarantees as a legal tender. DeFi stands for decentralized finance, mostly referred to as cryptocurrencies. Unlike fiat money, cryptocurrencies are not issued by any central bank or government. With CBDC, transactions are made directly, and the central bank keeps its record. On the other hand, cryptocurrencies have more privacy as the transactions are made through wallet addresses. The transaction is processed by blockchain in cryptocurrencies, while in CBDC, the currency is controlled by a central bank. Fiat money is stable and secure, while cryptocurrencies are trustless, immutable, and have volatile behavior, as its price rapidly changes. What is CBDC? A CBDC is a digital version of a country's fiat money. It is issued by a central bank and is bound by the national currency of the country. As it is issued by a central bank, it can be used for different transactions, such as paying employees their salaries or purchasing any goods. This type of transaction won't need you to visit several banks and won't cost you much time, as it will all happen instantaneously. For those residents who don't have a bank account, CBDC will provide them with a way to transfer money digitally. The point to remember here is that CBDCs are not cryptocurrencies. Although the idea behind both is the same, they are two separate types of digital currencies. The key difference between both is centralization. A cryptocurrency is a decentralized currency, meaning there is no central authority that controls it, while on the other hand, central bank digital currencies are regulated by a central bank. Cryptocurrencies are volatile. Its value is unpredictable as their value changes rapidly with time. On the other hand, CBDCs are designed for stability and safety purposes. CBDC is similar to cryptocurrencies but does not require blockchain technology. 2021 versus 2022. However, 2021 proved to be a great year in the development of CBDC, and it is looking forward to a boom in the market in 2022 as well. Especially, the pandemic of COVID-19 boosted the use of digital currencies. As we increasingly started paying digitally and shopping online, the need for physical cash is evolving, and that of digital currencies is rising. Our money and savings are moving from our wallets to our smartphones. These changes raise the question that whether the central banks design a digital currency of their own for retail use. Later on, it came forward in the form of CBDC. The benefit of implementing CBDC is that it will make the transaction easier, quick, and cheap. CBDC also helps to solve the problem of currency transfer for those who don't have a bank account. CBDCs are easy to track and the risk of a commercial bank collapse, as CBDCs are bound with the central bank of the country, so as long as the central bank is stable, the currency of people is safe and secured. As all these transactions are recorded on digital platforms, there are minimum chances of fraud or scams. The rise of CBDC. Unfortunately, there are few drawbacks to using CBDC, as the CBDCs are under the control of the central bank, so the central bank has the authority to put any type of restriction on its transactions. The central bank holds the record of all the transactions, so there will be the possibility of privacy issues. By using CBDCs, consumers would have direct access to their currency. This is bad for commercial banks, as they will lose a large portion of their business. This will impact their shares in the stock market, and the bank stocks would drop in value. After seeing the global rise in CBDC, developing countries like Nigeria, Thailand, Bhutan, Korea, and Singapore acknowledged its importance and revealed their plans to conduct CBDC studies. Nigeria has launched its CBDC, for example. The Bahamas has launched the sand dollar. Among the countries with great economies, China is the first country to test a CBDC, for example, digital yuan. The US is still in the research process about the costs and benefits of launching their own central bank digital currency. We are likely to see most of the countries launching their digital currencies in the near future. Future of digital currencies. We are still in the early phase of CBDC. But the digitalization of payments cannot be ignored by the central banks, as it is the idea that is catching on day by day. The countries that are researching and exploring CBDCs more than 90% of the world's gross development product. Central banks, which have provided their money in physical form only, don't need to underestimate this transformation. CBDCs are not likely to replace cash completely, as physical cash has several advantages including confidentiality and privacy. CBDCs will not only affect money, but also the economy and finance of the country in different ways. It is noticed that the end of cash is on the horizon, and there will be a long debate about what could replace it. That's why the future of money is to be determined carefully. To make sure that public money will maintain its fundamental role in the digital era, the European Central Bank has launched an investigation team to figure out the confidentiality of CBDC. We can't forecast what will happen in the coming years, but digital currencies look more forward and attractive than physical cash.